Hi, I'm Doug Rawson, founder and CEO of BaseBuilders. In this video, we're going to take a look at profit and cash flow, compare and contrast the two, and see how they relate to your business and your business viability. What is the effect on your company between profits and cash flow? So I'm going to start with a couple definitions and get some things defined. So let's talk about profit. What is profit? Well, profit is typically what you're going to end up reporting on your taxes. It's going to affect, but it is not your bank balance. That comes from cash flow. Profit, of course, is a very good thing, and we're all striving to make money. That's why you went into business. And you're not going to last too long without it. If you don't eventually become profitable, you're going to be closing the doors. You won't have an unlimited supply of funds to make up the difference. So let's take a look at how it all lines out here. We've got our gross revenue, which is going to come from your billings. Then we have direct expenses, which is your consultants and prints and plots and all these other direct expenses. Then you have the monies that you get to operate with, also known as net revenue. So the net revenue is the money you have to pay for the operating of your firm. Out of that will come your direct labor, your indirect labor, and your expenses, giving us your operating profit once we do all the math. These are the funds that are available to pay bonuses and make distributions, or to pay for upgrades of equipment around the office. Next, there's an optional expense, often known as bonuses. There may be some other optional expenses in there. And after you subtract those bonuses, then you're going to get your net profits. The net profits are what typically show up on a K-1 if you're a partnership. So that's going to be a flow-through entity. You're going to report that on your taxes. Or if you're a C corporation, it's what you're going to be paying taxes on. So let's take a look at cash flow. Cash flow determines your viability. If you don't have a positive cash flow, pretty soon the bank account is empty and you're out of business. You can end up with negative cash flows while making a profit. If your profit's not enough to cover obligations such as debt service, then your bank account is going to be shrinking even though you're showing a profit. And cash flows are what cause bankruptcies, at least when they're negative. It is basically what's happening in your checking account. And of course, just like if you never reach profitability, if you have negative cash flows, you're going to be out of business before too long. So let's take a look and see how the cash flow is calculated here. We're going to start with an opening bank balance. That's what you got in the bank. Then you're going to have income from all your sales. Then you're going to maybe put money in out of your own pocket to get things started. And perhaps you've borrowed some money to get your firm off the ground. Or while you're operating, you may be letting your credit card balances grow, or you've brought in a line of credit and added money to the bank. So what's available at the end of the day there is how much you can spend. Those are your available funds. Of course, you're going to be paying bills. You're going to be servicing your debt. You're going to be doing capital purchases for your assets. You might make some distributions and put some money in your own pocket. That's always a good thing. And then your closing balance. It's the difference between that opening balance and the closing balance that is your cash flow. Hopefully, it's going to be positive, but there are times when it will be negative, and those times are not always bad. There can be a situation where you have negative profit and positive cash flow. First, your startup funding. You're putting money in, so you haven't made a profit yet, but yet the bank account grew. Or you may be getting a loan. Remember the PPP loans that came during the COVID-19 crisis? Your credit card balances may be growing. So those are growing and you're covering, the negative profits with that money, but you're not paying those balances down, so your cash flow is still going up because you're not paying those credit card balances. Or there may be a failure to pay your consultants. Also, You can have a negative net profit if you're depreciating assets that maybe you purchased last year. So you're getting to depreciate that expense this year, but that does not affect your cash flow. So if you're in this situation, it should raise some red flags, and you just need to know, why are we in a negative profit while we're having a positive cash flow? What is the cause of that? Because it's the cause that you will need to take action on. Another situation is where you have both a negative profit and negative cash flow. No, this isn't a great place to be, but it is typical for startups. Let's say you funded the company in month 1, and now we're into month 2. You're not making a profit yet, and you've got your negative cash flows. In that case, it's normal. As long as you have enough runway and enough cash in the bank to get you to where you're in the cycle, where you are making money and you do have some positive cash flow. Of course, if you have too much overhead and too much expenses, it's going to cause this. You might have just a growing accounts receivable. Your clients aren't paying you. You're building up this big AR, but what I have found, it's very hard to spend accounts receivable. You need to get that money collected and get it into the bank so that you can use it for your operations. You also could be making back payments to consultants. You didn't get them paid last month. You don't have a great amount of income this month, but you got the cash in the bank. So you make those payments to those consultants so it counts against the current month and it affects your cash flow. Economic slowdowns. Who doesn't remember the Great Recession or the COVID-19 crisis or pandemic that hit us? Also, bonus time. You might be paying bonuses out. And if you're doing that, you could be in a negative profit and a negative cash flow situation. Let's take a look at this. If you had operating profits of $12,000 and then you paid out bonuses, and let's say the bonuses were for the last 6 months or maybe the last 12 months worth of work, and you pay out $30,000, you've got a negative profit of $18,000. You've also got negative cash flow in the bank account. Well, it's expected. That's normal. So just because you have a negative profit and a negative cash flow doesn't mean it's the end of the world. You might be doing that on purpose. The thing is, you have to know, why are you having these situations where you're negative in either your cash flow or your profit or both? What about that situation where you are making profit but you have a negative cash flow? One is you're doing that debt reduction, right? You're making money, but it's not quite enough, but you've got these mandatory, and maybe it's just voluntary. You want to get out of debt. You're making the back payments to consultants, or perhaps, as I love, shareholder distributions. You're taking money out of the company as a distribution. It doesn't count as against your profitability, is what I should say. It doesn't count as an expense, was the word I was looking for, but yet the bank account goes down, which is, of course, negative cash flow. So this could lead to some financial, challenges down the road. Or because it's your distributions and you're careful with your money, it may not have any negative effect at all. You just need to know. Now, this is my favorite slide coming up, which is the positive cash flow, positive profits. That's where we all want to be. It's a great place. And I might even get on my happy dance, I know, shouldn't be so silly in these videos. I just want you to know that this is where you want to get to. It is a great place to be. And that's the goal of everything that we're doing as we're starting our architecture and engineering firms and going out there and taking all this risk, is to get to the point where we can be in that happy place, make a great living for ourselves. Hey, if you enjoyed this video and maybe even learned something, will you do me a huge favor and share it with your colleagues and associates? We want to help as many people and as many firms reach their goals and those high levels of success and profitability. Thank you.